Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, September 8th, 7 o'clock straight up as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, everything pretty much flat as a pancake. That, of course, is because, or most likely because, Jay Powell is making a presentation that starts at 9:10 a.m. this morning, and come to find out that he is going to be taking questions after his presentation. I have no idea if that's going to be televised on Bloomberg or CNBC or anything else, but you'll probably see some gyrations pre-market as whatever he says comes out. Then, of course, we've got jobless claims at 8:30, and then we've got nat gas inventories at 10:30 and oil inventories at 11. Not much else on the calendar today as far as macro goes. On the earnings front, I didn't see a whole lot before the bell. After the bell, we've got DocuSign, Zscaler, and Restoration Hardware reporting. So yesterday we had a nice day. We finally got the bounce that we were looking for after a couple days of frustration. So that was nice. I hope you were ready for it. And before I get too far along, sorry for the technical difficulties yesterday. I mean, it happens sometimes. Just you don't expect it to, but then when it does, it really gets you. So apologies for the delay getting that out to you yesterday. So let's dive into the charts. U.S. dollar holding its breakout. I'd have an alarm at 109 for a potential downside break. If you got that alarm to go off, I think it would be a net positive for equities. Just relaxing the liquidity a little bit in the global markets. I think you'd see, if we got a pullback into 107, this trend line, then you'd probably see a lift during those, however long it takes for it to drift down here. I think it would be a buy. I mean, that's a technical buy. If you got a pullback to trend, you got to assume that trend line is going to hold, especially how strong it is with all these touches. So if you did get that break, I think equities would be strong during this period. And then if you wanted to trade the dollar, I would be a buyer there at the trend line. TLT had a decent day, up 1.6%. And I'll tell you, this was very helpful for me yesterday to have the 5-minute chart up on my montage as I was trading, the various intraday charts. That along with the VIX, when you see, if TLT is going up, rates are going down, that's a plus. And of course, then VIX falling as well was a plus. And, as the day unfolded, more or less TLT kept driving higher and the VIX kept falling. So for me, that was a signal to, stay long in my, short-term active trading positions. And here the VIX, we lost 25. We went, what were we down? We were down 8.5%. So now down below 25. I think 25 remains a nice reference pivot level for you on the VIX. And intraday, you're just looking for trend, right? It's usually either going up or going down on any particular day. Again, today, if we get the bounce to continue, I would expect TLT to be, lifting, going higher, and the VIX to continue to fall if we get the follow through on this bounce. We actually even got a bounce in Bitcoin that has recovered 19,000. So if you're any kind of Bitcoin trader, you want to be long against 19,000, right at the bottom of the range. A little bit of an undercut, and then a quick recovery. Now you've got a very tight long position. Tight meaning you've got the availability of a tight stop on that type of position. I did get one question on one of the YouTube videos. How do I trade? How do I trade Bitcoin? And basically that was it. Bitcoin tends to trade very well to the technicals. You can just go through and see how well it behaves at the various levels. It's, there really are no fundamentals. You're not going to get an earnings report. You're not going to get a CEO that comes out and says, this or that makes the stock go up or down like you do with equities. So it's more or less a lot of technical trading. And so my recommendation would be sharp on your technicals and trade very small while you're learning. That's always my recommendation on people getting started. Don't worry about the money. Worry about, trade execution. And once you build that confidence up that, okay, long against 19,000, we got to bounce. And, then we, took out resistance, or we lost support and I got stopped out. That's good trading. That is the essence of good trading, knowing where you're going to get in, knowing where you're going to get out, and knowing what your potential risk is on any particular trade. And the better you get at respecting those levels and holding your discipline before pulling the trigger, then the quality of your trades is going to go up. You can't really predict what's going to happen. You get, there's curveballs all the time that happen in trading. All you can do is take your signals and respect your stops and, look for your technical targets and then see what happens. So anyways, anytime you lose a level, even briefly, and then recapture it, that's a buy level. So that 19,000 has to hold. Bad day for oil yesterday. Bad break here. Now price is in no man's land. I think until there's a recovery to this level, very hard to take a long until, we're in no man's land. So if you got to move down towards 78, where there's some technical support, I think it's hard to take a long here. Now, that's just looking at the daily chart. If you see something on if you're trading USO on a 5-minute chart or trading futures, that's, a whole different ball of wax. All I'm saying here is that on the daily chart, you've got a bad break. That was your sell signal if you were, watching that to trade. And now we're in no man's land. So I think it's very hard right here to really do anything unless you see, the only thing you could do is, if you were willing to do it, is to assume a continuation of that move and then set your stop just somewhat above. But whenever you're in a situation like this, you could easily get a kickback rally, break down, back test, and then fail. So whenever you're in no man's land, you got a much higher probability of bad things happening if you try to, initiate a position at this point. Up here was your trigger yesterday. I mean, I wasn't in the trade, but if you were watching that, that was your trigger, and if you did that, you did really well. We got the bounce and the oscillators. Here's NIMO back up to 60. What we want to see now that we got the bounce is to get a continuation of this up into like at least the midpoint, where then it's going to be much less, this indicator will be much less useful than down here at extremes. So I'm hoping that we get an extended run that pushes the oscillators up at least towards the midpoint of the range. And same here on the NASDAQ. We bottomed out and then we bounced out of oversold territory up into the minus 48 range. So now hoping that it extends a little further. On SPY, got the nice, what was it? Yeah, almost 2% bounce. Notice right here that if we do get the extended bounce, be aware of where your resistance points are. You've got the declining 8-day right here. That's essentially where it stopped yesterday at this 8-day. And then you've got the convergence of the 50 and 20-day declining exponential moving averages here at about 405. And then I think the ultimate challenge, if you will, would be if we got to bounce back into this big resistance zone that we have been focusing on for months and months. I think that's going to be a tougher nut to crack. And I would, in general, be saying, be peeling out of your longs at that point. And then if by chance we break back above 410, then you could reinitiate your position and look for 415. But, if you were good enough or lucky enough to get this run up into 410, I think that would probably be about as much as you could ask for on a bounce. Here we are. We had a little double bottom on the 60-minute chart. We have been saying that this was the, this 390 level had to hold, and it did. I mean, it tested it a number of times. But yesterday, what was nice about it, and you never know this is going to happen when you're getting long down here, you don't know that you're not going to have any red bars. It's always nice when you get this kind of unidirectional move, but you don't know that. So when you take that position, you can handle it one of two ways. You can, let's just say you bought 390 calls yesterday. If you got a $3 or $4 move, you could roll your strikes up and go to the bank like we talked about yesterday, or you can trail up a stop and just use that as your exit point. If you were to, if it were to come up here to 396, you would kind of expected a reaction there. Didn't get it. It blew right through that area, but you could have moved your stops up along the way. How I chose to handle it is I had rolled up a couple of times, having been messed this trade up by not rolling higher, and then I got trapped. So I lost this good opportunity here to bank some profits, and then ended up giving them all back. So I didn't want to make that mistake twice on consecutive days. So I was rolling up the whole way. Qs, you can see here coming in to the 8-day. I think resistance here is going to come a little bit sooner than on SPY. We've got this prior zone here around 305, 306 that might get a little tough. And also notice that you've got the declining 20 and 50 coming in here about 308. So things might get a little tougher for the Qs if it moves, into this resistance band. Here on the 60-minute chart, we have the same kind of double bottom look, holding that 292. We managed to get through 296, which was a big level, and then we came up here to 300. I think 300 is your pivot this morning. You break above that, I think you've got an opportunity to look for 305, where this downtrend line and little resistance band comes into play, and that lines up really well with the resistance levels that I just showed you on the daily chart. Nice move in IWM yesterday. I've got a significant level right here at 183. You'll notice again, that's where the 8-day comes in, but we also had resistance here, support, and resistance back along this line. We actually had resistance here as well. So I think for IWM to make further progress, got to take out 183 and then look towards these upper declining moving averages around 186 and 187.50 ish, where this downtrend line comes in as your next big resistance levels. And here you can see it on the 60-minute chart. A little bit different here. We've got two high volume overpriced bars here. We got a cluster of resistance here, and we got resistance here. So as long as it can hold this 181.50, I think you can make a run at 184, 185. And then if it gets through that, then you got your run to 187. Meta didn't do much yesterday, 1%. Still inside this old gap. And you've also got a downtrend line here coming off the highs. I think here, well, you can choose to trade it as you like. You do what you want. But here, I would like to see you kind of hold your ammo till you got a breakout above the trend line and the old top of the gap at, let's just call it 162. Then you've got some running room up towards 166.50. I mean, you take a long right here, you got, I won't call it a wall, but you definitely got a hurdle to cross right out of the gate. And so maybe give up that dollar that you're going to try to get right here and just wait, make price prove it, make price clear the downtrend line and the top of the gap at 162. Then you got a much clearer path up towards where these bars got rejected up into that 166.50 area. Then you got a chance for $4, something like that on the trade. Apple had its big product event yesterday. I didn't follow it very closely. From a technical standpoint, we put in a base here. I mean, a solid base, a lot of touches right down along 154.25, even 154. Got a little bit of a lift. I think your pivot here is the bottom of the old gap at 157. Then you can look for 159, and then you can look for a run up towards 162.50 if it was able to do that. I think this will be a tough little area. Here you see resistance, resistance, support. So you've got a little band here between 159.50 and 160 that where price may hesitate, is what I'm trying to say as it hits that resistance. Tesla had a really nice day yesterday, 3.38%. Had an, I believe, let's see. Yeah, you had a low here of, well, I guess it opened in here. You had a low of 272, but you had a good buy crossing 275, and that led to a bull flag right here under resistance at 280. Spent a lot of time there, but then finally broke out. I think as long as it holds 280, you can be long. In fact, if, let's say, Powell talks and there's a pre-market wobble, right? And they bring it back into 280, 278, something like that, and then it quickly recovers 280, I'd be a buyer there, and then look for 287, 290 on the upside. We've taken out this downtrend line. We put in a double bottom, and now we're showing some good relative strength over the last few days, where this chart has looked a lot stronger than some of the other ones that we just looked at. So I think there's some room here to get up into 287.50, 290, as long as it holds 280. And if you got a pullback into 280, I'd be a buyer there. Microsoft didn't do a whole lot yesterday. I was trying to trade it, or I did trade it. Got a good entry down here and, made it up to the top of the gap. So relatively pleased with that. I took it off into the close just for the simple reason at resistance. I think what my strategy would be here today is a break above 259, which was the top of the gap, then look for 264 where it ran into trouble along this line, and also where the downtrend line comes into play. That would be another place where if you got a good entry down around 259, 260, and you got that $4 move, I'd be taking it off there and expect at least some type of a reaction. And then if price can prove it, break above this downtrend line and 264, then you got much more of an opportunity to go up and get these minor resistance levels. I think your biggest level here, now that I look at it, would be right here at 267, where you had these rejections. But after that, that was some fast trading, and you've got a relative gap in the profile where the resistance would be a lot less. Amazon had found some support down here in 425, was able to take out this 127.50, which was a pivot point, actually took out the downtrend line, and now is wrestling with 129.50. That's right where the 50 EMA comes into play. So if it can clear that, I think you got to run up to the top of the old gap at 132.50, and then it'll get a little tougher to get through that area at 134.50 where you had all this traffic here and where you got the breakdown. So I think it's just a matter now of if the bounce is going to extend or if it, comes up and rolls over. So I think you got some pretty clear pivots here at 127.50 and 129.50. Hopefully we can get a push up towards the top of the gap and even possibly break out if things get really bullish. I think Google's going to have a harder time. I took this breakout here yesterday. $2. A win's a win, not anything great. I think it's going to get a lot tougher for Google right in this range. Rejection, downtrend line, resistance band. I'm probably not going to play with that today. But if you got a breakout, if it got through 110, 110.50 and then cleared 111, then I think you got some running room up towards 113.50, 114. Netflix. I was not focused on that at all yesterday, and it had a really nice day. We had hypothesized a big, bear flag breakdown. That didn't happen. It broke above and then cleared this 224 and then broke the downtrend line, even cleared this resistance level. So from my view, as long as it can hold 228, I think you've got a path back up to 234, and that'll be a big, big level. Why? Rejection. Big line of resistance there. If you got a break above 234, I think you would make a quick move to fill that gap up to 240. So it may be worthwhile to pay attention to Netflix today. And if you got that yesterday, that was an excellent trade. So congratulations there. Semis still basically dogging it, up 1.6%, which isn't all bad, but we had this double bottom here at 204, managed to take out 208. I think your next level is right around 211, and then a more important level is going to be up around 214. If you got 214 taken out, then you got 218 as your next target, and then the bottom of the old gap and the downtrend line down here at 222. I think that's what you should have in your sights on any kind of an up move in semiconductors. And then through ARC, I think you'll see that with yesterday's action, most of them recovered the midpoint of their trading range. You can see here on ARC-F, recaptured this level. We still got a lot of resistance here with the falling 8, 20, and 50-day moving averages. But if you're interested in trading it, you can stay long against the midpoint right here at 17. Same thing with ARC-G. Had a little baby undercut and then popped up above. I think you can be long against 34, looking for 38. And the same kind of comments hold true that I said before. If there's a pre-market wobble and this thing pulls back to 34, stands to reason that you would want to take it long there, right? We had several touches at 34 that essentially held, and then we recaptured it yesterday. And so then on any kind of back test of that midpoint level, you want to try a long there if you're interested in trading it, and then with your stop just below in case the wobble turns out to be, something more to the downside. So I think that's a really nice pivot level on ARC-G. And same thing on ARC-K. You've got the declining moving averages that you'll have to chew through on the upside, But the good news is this midpoint line has held and been recaptured. So I think you can be long against 41. ARKW, not as compelling as the prior three. Why? You're still below the midpoint line and below the 8-day. So if you are interested in ARK, I would just have 252.50 alarmed, and if you got that breakout there, then that's your buy signal on the recapture of the midpoint. I want to show you a couple other positions that we have. We had been messing around with the ITB, which is the home builder index. We had gotten short with September 60 puts. We had gotten a nice down move where I said, either take it off or roll it down to October 55. And so now there was a pretty healthy bounce yesterday, 2.5%. If you're in the October 55s, I don't think you want to just sit in those. I'm actually in those. I rolled down. So my stop is here at 57. If we get a move above 57, I'm just going to take it off and then see where the bounce may end up proceeding. And then if it looks like things are going to roll over, then potentially reinitiate at higher prices. So, but you can play that one depending on if you're in it, if you're not in it, etc. Kind of down on the home builders, but price talks, and why sit in something that's going to be bouncing. Really nice day yesterday. We're long BJs. I think we're in the October 75s. Got a nice 4% move yesterday. So if this move extends, I think you're going to want to roll that higher up towards October 80 and see if the thing can extend while at the same time taking some money off the table. Another thing you could do is sell in October 80 or even in October 85, and then you'd have a 75-80 spread or a 75-85 spread. We still got over a month to go till that expiration. So I'm hoping on this big impulsive candle that it leads to more upside. So anyways, that was a nice surprise yesterday to get that kind of a move. So as we wrap up this morning's video, just a couple of thoughts. Jay Powell is always a wild card, especially answering questions this morning. So I'm leaning bullish just because we had a nice day yesterday. I'd like to see that extend. Have your levels on the downside marked where you would conclude that you either get stopped out of stuff that you held overnight, or that something Jay Powell said just wiped out our bounce yesterday. Anything can happen. I still think we can drive marginally higher on this bounce. That's what I'm planning for. That's what I'm positioned for. But don't take anything for granted. As always, go level by level, and that way and respect your stops, of course. That way you'll either preserve your gains or prevent losses, however you want to look at it today, depending on what he says. And by all means, have the VIX and TLT front and center so you can keep an eye on it. They're very good tells on what's happening. When you see rates falling and TLT rising, that is positive for the market. And so if we see that today, I would expect higher equity prices. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. As always, if you're new to the channel, thanks for watching. If you want a technical game plan each and every day, hit the subscribe button, the alarm bell. You'll get notifications on YouTube content, and you'll also find a link in the show notes where you can drop in your email address and get any intraday content that I send out, or after hours, it'll come right to your email box. And you'll also get an invitation to our trading room where you can join myself and the rest of the aspiring traders in our group that are helping each other out with call outs, things that are going on. When you're trading, you tend to get fixated on the things that you're looking at. And, when other people are looking at other things, they can and often do point out, stocks on the move, breakouts of stocks that they've been focused on. And then you can quickly take a look at them in real time and see if you want to get involved. And even if you're not, if you have a real job, that's great. Take a look after hours and spin through, maybe make a list of tickers that were called out, and then that will possibly turn you on to some stocks that you would do well with. So let's wrap it up there. Hope you guys have a nice day of trading. So until we speak again, this has been Chris Buss with Traders Profit Compass. Talk to you next time.